Hey, good morning, everyone. A little later than I would have liked to start here. It is January 29th. It's Monday. One second. Let me just, some of these things are just still loading here. But anyways, there's a decent bit of news to talk about as the week comes to a new start, right? One of the things that I have here on the screen is crude oil futures. We gapped up really aggressively overnight, only to get sold off, right? The entirety of this. Realistically, this week we're going to be talking about a lot about the FOMC, the the Federal Reserve meeting minutes, which come out with a rate decision that's going to be on Wednesday. This is one of the main things that everyone's going to be watching for. Right now, there's a pretty much near 100% chance that we're going to keep our rates as is between 525 and 550 as it currently stands. Then the first expected rate cut is going to shape up in March. So leading into that, right, there is pretty big expectations that the market remains fairly sideways and fairly static when we talk about equity futures and equities in general. We also have the continuation of earnings that come out this week with, let's see here, seems like I'm slightly unprepared for this. We had a continuation of earnings with big tech earnings. Remember last week we saw Tesla really get beat up. We had also Netflix, which came out really well and gapped up very aggressively. But right now, some of the main things that we're going to be talking about are oil prices, the Federal Reserve, right, China as well, and so on. So oil prices, right, pretty volatile after another drone strike by Iran-backed groups in Syria, and Iraq killed 3 U.S. service members in Jordan. Front month March Brent crude rose nearly to $84 a barrel, right? This is not the March contract, but it rose very aggressively on the overnight, while the WTI crude rose to about $79, as you can see here on the screen. And the attack, which also wounded at least 25 service members, marked the first American death from enemy fire since the beginning of the Israeli-Hamas war, which we shall respond, declared President Biden. We will carry on their commitment to fight terrorism and have no doubt we will hold all those responsible to account at a time in a manner of our choosing. So, even with, over the past few weeks, even with all this going on in crude oil, we still haven't found our footing to the upside. Last week, we did see a decent little pop, but right now, crude is pulling back on the pre-market movement here. We did get that gap higher on Sunday, now pulling down. I suspect that crude can pull down with this equity market slightly in the coming weeks before we get that next rally. I do like how crude has spurred to the upside over the last few weeks, but I think one more pullback to kind of maintain some kind of balance here around that 71, 72 that gets picked back up is kind of what I'm watching for. In China, right? China has been recently in the news with some decent gapping to the upside over last week, right? That has kind of been subdued right now. But the world's second largest economy is in the spotlight again, with the property market standing at the heart of its troubles. Construction accounts for as much as a quarter of China's gross domestic product, their GDP, but real estate reverberations are shaking up confidence, and many are afraid about knock-on effects for other parts of the economy. So things have also never quite recovered after years of strict zero COVID controls, and fresh crisis could compound a deflationary spiral. So we've seen that China's Evergrande, the world's largest indebted property developer, has been ordered to liquidate by a Hong Kong court after a judge there ruled that it is time to say enough is enough, with more than $300 billion in total liabilities. Evergrande's first default in 2021, but court hearings and restructuring talks dragged on as many bet that the Chinese government would eventually offer some kind of bailout. So trading in Evergrande shares was suspended on the overnight after the stock plunged more than 20%, with a liquidation likely to send another shockwave through Chinese markets and prompt authorities to act to contain the deepening crisis. Right? We saw that. I think it's HSI, right? The Hang Seng. We also have the CSI 300. Why they give me inversed? Anyways, there's a Hang Seng, I guess. So if we pull back here, right, we haven't really done too much since the start of 2023. The market's just been continuously going down, down, down over in the Hang Seng. We also saw that, let me see, some steps to help may have been also taken as Chinese regulators implemented a curve on short-selling stocks to firm up the country's stock market. The Shenzhen and Shanghai exchanges said Sunday that investors who buy shares will not be able to lend them out for short-selling or a lockup period. Another item in the Evergrande saga that will have to be hashed out is the repayment rank of offshore bondholders. It's expected to be a thorny process and will determine how China treats foreign creditors. So, all in all, right, it does generally appear that China is following the same path that Japan had been in the late 1980s. Japan had spent about 3 decades to fix its household and corporate balance sheets, and we think that China problem is even more severe than Japan because at the time Japan's bubble burst, Japan's population was still growing. In contrast, the population in China is already in a decline, and iShares MCSI China ETF MCHI has declined by about 60% since early 2021 due to China's weakening economy growth momentum, and it's facing serious long-term structural issues. As we see here, even on the Hang Seng, you can see the futures. They're just been on a steady decline since 2021, so about a 3-year downside market move. So is it time to buy China just yet? I don't know. Last week's aggressive pop and gap higher spurred interest in China yet again, but right now as it stands and all these things just continuously popping up, it doesn't mainly look like the best opportunity. We also have some news out of the European Union here, I believe, is likely to end funds to Hungary if the country blocks fresh aid to Ukraine at a summit on Thursday. A nuclear option of kicking Hungarian Prime Minister Viktor Orbán out of the EU voting process may also be in the cards. Boka János, Hungary's EU minister, said the country would not give in to blackmail, but Budapest did send a new proposal to Brussels in which it signaled readiness to use the budgetary proceeds for an aid to Kiev and even issue debt to finance it. So it's not really that necessary to mention in terms of what we're looking at right now, but I wanted to take a look at that as well, as we will take a look at the S&P 500 futures very soon. But Tesla, where I kind of sparked my interest this morning as we're starting to gap higher right into a very interesting area around that lower 180 after we gap down very viciously on these earnings. Now remember, this week with earnings we have AMD, which comes out tomorrow, Microsoft comes out tomorrow, Amazon comes out on Wednesday, Apple on Wednesday, Nvidia on the 21st, Alphabet tomorrow, Meta on Wednesday, Palantir coming Monday, I think. We also have Pfizer. So a plethora of different earnings, right, with the Mag 7 coming out. The other big tech names that are going to be interesting for us. So these, right, they could honestly make or break. If we start gapping down and pulling back on a lot of these big tech names, right, we're going to see some downside pressure in the overall market. Apple looking like the weaker one with the highest market cap right now. So let's take a look at the S&P 500 futures here. What we got is a continued sideways balance all in all in these S&P futures. And I think that this week, right, we have some continuation on the sideways momentum as we come into the FOMC. After the FOMC, right, things could start taking a turn to the downside. I think the first 2 weeks of February is going to be an area where we can see some weakness in the market to actually pull down a little more aggressively so we can get some better buyers stepping into this market. I think these buyers are kind of just lackluster at this point. Last Friday into that 30, yet again, the same thing that happened a few days prior. We created a lot of volume at that high, and a lot of longs got stuck, prompting this downside move. We keep getting pushed down and down and down, but nothing comes of the downside momentum move. We still can't open under 48.95, 96 area, which is prompting this current bullish movement. I think one of the last levels to see buyers come in is 48.90, which is fairly decent ways away, but no opens under those levels, I think, is going to be a little more difficult for prices to see the acceptance to the downside realistically. So I'm going to be watching for that. I want to see how we hold out into this mid 20, low 30 as resistance points. I think we can get maybe one last hurrah to peak a little higher before we start this pull down, but it's just harder to be bearish until we start seeing moves under 48, 95, 96 to clean up some of the auction to the downside, where we can come down and test that 48.74, 48.65, and then what I'd like to see is 48.40 get traded, clean up some of this auction, then we can decide where we go from there. But I think a deeper pullback is going to be needed to find some better buyers to the downside that will allow these prices to continue higher. So I'm not necessarily bullish. I'm very range bound on the next 2 days leading into the FOMC. So I expect just kind of choppier, lower volume movement. So trade the levels, right? We're still technically bullish, so they're going to try to buy some of these dips, but be very cautious of that. Just trade the range realistically, lower your trade size, lower your trade quantity as we come into the FOMC, and right, a plethora of different earnings that come out throughout the week. Morning, people. Do I follow Sam Carson? No, I don't. I'm not gonna. No comments. Anyways, let's open up our live trading room, and we'll see what we get into the futures front there. We'll look at NQ. We'll look at S&P, Russell, right? We'll break this down, and let's get on over to that. And we'll see you guys tomorrow and the rest of the week. So thank you guys. Take care, and let's see how these earnings play out and the